Hello investors, welcome back to the Budget Investor. So, you want to start investing, but the problem is you have no idea what you're doing? That's okay, that's what I'm here for today, to help you. So why should we even invest in the first place? A general rule of thumb with investing is that to earn more, you need to risk more. Putting money in the bank is pretty low risk, but you'll pay for that lower risk when you get a low interest rate. Investing in shares generally pays much higher return than putting your money in the bank, but there's also a higher likelihood that your shares will lose some or all of their value. So it may be tempting just to stick your money in a savings account. After all, you know you can get it whenever you need it and you'll get paid steadily, but you'll get it at relatively low interest rates. This is probably a good approach if you're intending to actually use that money soon. For example, like an emergency account. But if you're saving for the long term, you can get away with taking a little bit more risk now, and over the long run, taking more risk will give you higher returns. So what's the first step? Well, let's learn what's out there first. There are two main ways to invest. You can buy shares in specific companies, or you can invest in funds. A fund invests your money in a basket of other stuff like shares in companies, bonds, property, or even just regular old savings accounts. Investing in funds helps you diversify by spreading your money across lots of different things, while investing in companies lets you fine-tune your portfolio to your specific goals. You can spread your investments across as many companies and funds as you like. So the next step is making sure you're comfortable with your approach. While it's true that you can get higher returns by taking on more risk, you need to also invest in a way that makes you comfortable. If you're not comfortable taking risks, you're more likely to panic and sell when your investment drops in value. This would leave you worse off than before. A good way to find out what kind of investor you are is to take some sort of personality investing quiz. I'll link one down in the description below to sorted.org.nz, which is a really good website. It'll give you an idea of how much risk you are comfortable with personally. So the next step is choose investments that are right for you. Once you've figured out the type of investor you are, take a look and find some of the things that match your appetite for risk. If you understand and have a higher appetite for risk, you might decide to go with something more volatile or higher risk. If you're a more cautious individual, you might choose to invest in something that is lower risk. And remember that each little investment is just a part of your overall portfolio. So be sure to think about what the bigger picture looks for you and add parts to it over time. At the end of the day, it's all about what you are comfortable with. If you invest in things that you are comfortable with, you're probably going to be more likely to stick with your investing strategy. And the more that you invest, the more comfortable you will get with the roller coaster ride that can be the markets. So what's the next step? Well, choose an amount you're comfortable with and get going. Now that we've figured out the basics of investing and what to invest in, it's time to get started. One option is to choose an amount per week, fortnight, or whatever works for you and just transfer that into your investing account on a regular basis. Choose an affordable amount that's right for you. High enough to make a difference, but low enough that you don't constantly raid your account when you want to go out for coffees, beers, or anything else that would be tempting enough for you to hit the withdrawal button. Could be $20, it could be $500, it's up to you. And the last step is just reassess every now and then. Have a review. It's tempting to set and forget entirely, but you don't want to completely forget. As you get more comfortable with investing, your tolerance for risk may increase, or it could even decrease, and other things might happen, like your income might change, or you might decide to change your spending habits overall. All these things flow into the amount you invest and what you invest in. So set a reminder to check up every few months, make sure you're happy with your investments, and make changes as you need to. So, if you think this video was useful and you think investing is for you, check out this next video here where we go into a guide on how to invest with Sharesies.